So actually, Ireland's not that far. I could almost swim to you at this point. LA, on the other hand, is quite far. So welcome everybody. Again, we're getting started here just momentarily, making sure everybody's good. Wisconsin, have you defrosted yet? A lot of friends that live up in the Wisconsin area in summer. Not now. Definitely not now. So fantastic. Cool. Snowflakes this morning. Yeah, I could do without that. All right. Gotta be mindful here. Phones on silent mode. Okay. Switching everything off. Make sure we're good to go. This is this is a little bit of an intense couple of trading sessions, no question about that, huh? So we'll look at live markets pretty considerable amount during this session. So I mean, look, I've got a ton of different positions on right now too. So let's make sure everybody's good to go before we hit our official start time. By the way, some questions always come up. Let me give you unofficial, statements over here. Number one, you can ask questions throughout the course of this. I'm reading the chat here in real time. Number two, everybody asks, is this live? It's live. Like, see, it's live. I'm actually showing you my trading screens right now, and that's about as real as it gets. So S&P is all over the place though inside of today's trading session, and still 2 hours remain on the clock. Let's get down to it. I like it. By the way, yeah. So everybody always asks me too the trading platforms I use. So obviously, I use Thinkorswim. I say obviously. Okay, I help build Thinkorswim. So yes, I still use Thinkorswim, and I also use Tasty because the founders of Thinkorswim went on to build Tasty. By that point, I wanted out of the brokerage world. So let's get into it here. All right. What we have here is 24-hour profit windows. I am Don Kaufman. This is Volatility Edition. This is completely going to be no holds barred. I'm going to move at a pretty good clip here today, which I'll explain here momentarily. This is a risk disclosure. We're not financial advisors nor a broker dealer. Obviously, I spent about 15 years inside of the brokerage world. We'll talk about that in a moment. Copyright disclaimer. This is ours. This is not yours. Also, if you need to ever get a hold of me, and I'm so adamant about this because I don't mind, email. Let's get crazy. You can definitely shoot an email to us. We do answer them. And if you need to get a hold of me, just go right here. Support at theotrade.com. Put Don Kaufman in the subject matter, and boom. Okay. Look, that'll get right to me. Next in the docket over here. Let's just jump right into this. Look, markets, they're at a critical inflection point. Whether people want to admit that or not, I think a lot of people are still talking about tariffs. And okay, obviously we've gone considerably beyond the idea of tariffs. And I literally want to jump right into this here. Markets have gone beyond tariffs. Markets and trade. And the first thing I actually want to start with today in this conversation here, trade takes on a life of its own. The trades themselves right now are at issue. The news, okay, is a bias that actually can drive volatility one way or the other, but the trades themselves, okay, are what are at issue at this point. We're going to be looking a little bit, I'm talking a little bit about a couple of trade opportunities throughout the course of this presentation, okay? But I'd like to throw this out here right now. We are absolutely at a critical inflection point. This, okay, is adapt or die in the markets. And a lot of people, they can't shift. They don't understand, okay, that the change has happened. And they sit there and they just deer in the headlights on us. Okay, this is a catalyst event. It's a very defining moment, specifically for you. Okay, can you make that adaptation? No matter how long I've been in this, trading arena, and I've been around a while, since the late 90s, when we hit patches of volatility, people do not adapt. Okay, and I've seen this before firsthand, which I'll talk about here momentarily. But it's a defining moment for you on the retail side. Okay. And some of the action, and I'm also going to throw this out here because this is wild for me to say, some of the action that we've seen in the last 3 days of trade, this is on par at this point, okay, with action that we saw during the great financial crisis. In fact, yesterday specifically, the rally yesterday, okay, a rally of that magnitude yesterday, it is the hallmark, if you will, of the extreme volatility that we're seeing. The up move is always the extreme. People, since 1950, there have only been 3 moves, okay, that have been that significant to the upside. Since 1950, there have only been 3 moves that have been that significant to the upside. 2 out of those 3 come during the great financial crisis. Okay. And again, it's going to get wild out there. And I'm letting you guys know. This was a headline from like 3 days ago. Irony is yesterday it actually regained back, okay, 3 trillion. Meanwhile, today, look, this one's going down to the books today. By the way, we're not done. Okay, we ain't done by a long shot. You're down like 3.4%. Okay, crap's going to get wild. And I love this because I don't think I've ever done a presentation, okay, ever, when it's this wild. So I am up for that. In fact, I knew the markets were going to be so extreme this week. I go back and forth. I live in the U.S. Virgin Islands. I'm in St. Croix right now. I flew here a little bit like impromptu, just no family, no nothing. Me sitting in my office basically like 20 hours a day because you knew that this week was going to be extreme. My wife's like, "Where are you going?" "Pack your bags. I'm out of here." Okay, I am on the island and trading $2.4 trillion. Now, okay, what we're going to be talking about extensively here today, okay, and I'm going to explain this is a system that's actually going to thrive in volatility. It's going to keep you intact, okay? Buy and hold might be dead. You got to have flexibility. You got to have variability. And the most important thing that I'm going to give you today is a go forward plan, okay? You got to have a game plan moving forward. Nothing we're going to do is going to be seat of our pants. Nothing we're going to do is seat of our pants. All right. With that, I'm going to give you just a quick, like, nickel tour of, I don't know if everybody necessarily knows who I am. If this is the first time, okay, if this is the first time you're ever tuning in to Theo Trade, well, welcome. By the way, if this is the first time you've ever actually tuned into me, okay, welcome. I'm a heavily caffeinated individual. I got my little energy drink over here. Second dose of caffeine today. I'm actually presently on Eastern Standard Time, although I'm in the middle of the Atlantic. I'm on Eastern Time. I'm actually at the point right now, the easternmost point of the United States. Yeah, we're in the Eastern Time zone right now. Second dose of caffeine. It's 2:00 in the afternoon. Let's get going. By the way, if you're brand new, come on, people, admitting it is the first step today. All right. Everybody always has a story about how they got involved in stock market. Like they always got like, how'd you get involved in this business? Well, me, I grew up in it. And I actually had family in the business all the way back to the early 1970s. And I had absolutely no intention of getting involved in this business. I literally had no intention of it. My undergrad, I studied molecular genetics. You want fries with that? 3 weeks out of college, okay, I ended up in Chicago. And just kind of a whim. It was like, "Hey, what are you going to do? You know, you're kind of done with school. What are you going to do?" And I go, "I think I'm going to take the MCATs. I think I'm going to go to med school." And they go, "Why don't you come and, clerk for a summer in Chicago?" So I go to Chicago. This is 1998. I go to Chicago, started clerking. I never left. And I actually, I mean, you can't put a 22-year-old kid down on a trading floor. Okay. And there's kids that are like 25 that were down on the trading floor that were driving like, Porsche 911s home and stuff. And I was like, "I'm home, baby. I'm home." I knew a lot about the trading floor, though. I'm not going to lie. When I got there, when I was 22 years old, I knew what it was about. I grew up around it. Right. So I was down in Chicago for a couple of years. I became pretty friendly with a few traders from the OEX pit. One of those traders, it was a gentleman by the name of Tom Sosnoff. Tom said, "Hey, I'm starting a brokerage firm. You need to come with me." He's like, "You're a kid. You don't know any better." Goes, "You don't need the money. Let's do this. You did really well on the trading floor. Let's do this." And I joined Thinkorswim in 2001. Before Thinkorswim was ever even like, out to the public, we were already working on the back end of the platform and so forth. So from 2001 to 2015 was a career both at Thinkorswim and TD Ameritrade. I was an executive at the firm when we took the company public in 2007. I ran the education division of Thinkorswim, but was also incredibly heavily involved, obviously, in many of the analytics of Thinkorswim. My specialty would be like I'm an option super geek, right? Not to freak anybody out, but yeah, the analytics of Thinkorswim was kind of a big portion of what I did early in my career. I went on to actually run education for Thinkorswim TD Ameritrade and their 7 million clients. And the biggest portion of that entire thing is, well, especially when I come to you on a day like this, and I'm looking over here because I can actually see the markets a little bit better. The biggest thing that I come to you with is I got to see everything that you did for the better part of 15 years. Okay. Before that, I was on the trading floor and got to see the order flow. So there are only a handful of people in this world, okay, that have the knowledge of order flow, okay, anywhere near this depth. What that basically means is we got to see everything you did. Like we didn't go into an individual account. It's like, what's Mike doing in his account? That's not what we did. We actually used, okay, some pretty significant data, and we used big data, and we actually figured out what works, what doesn't. In fact, the trade that you're going to see today, okay, literally comes from this data. You're going to learn today what cost other billions in mistakes, and especially in volatility like this. So, as I said, this is 24-hour profit window volatility edition. I still do TD Ameritrade TV, which is now Charles Schwab. So I do Charles Schwab TV every Wednesday. I'll still take once in a while a CNBC. Not a big advocate of doing CNBC. I'd rather do Charles Schwab TV. It's much more laid back, but this is the big one. It's me pitted against, obviously, Kevin O'Leary. Let's get down to business. Okay. This is why you're here. We're actually going to learn a little bit about profit windows. Okay. We're going to look, okay, at three specific forces, okay, that are wide open right now. And as long as these forces are wide open, those profit windows, they're just going to come over and over and over and over again. And you're going to learn how to take advantage, okay, of some of this time sensitive windows, okay, and unequivocally that this is the best time, okay, to learn how to do this. And this is wild markets. This is trading out there in traffic, okay. You love this. I'm telling you, okay, volatility, this is my animal. I was born into it. Okay. Get equipped and get armed for volatility now. Okay. Active trading is going to be the path forward. Okay. The idea of buy and hold right now, I have to take deep breaths when I even think about it, because this is a time when, and again, I'm giving you my experience from the brokerage world. This is a time when a registered investment advisor, I'm not picking on anybody, but this is the time when a registered investment advisor says, don't worry, sir, you're in it for the long haul. When is the long haul over? Is that when you have one foot in the grave or both feet in the grave? Okay. You cannot deer in the headlights this. You can't look away. Look away, I'm hideous. You can't do it. Okay. Get active. We're going to give you a proven system here. There's going to be extremely low time constraints. Capital efficiency, okay, is job number one. Everything I'm going to do right now is define risks, okay? And you're going to just simply flow with market conditions, okay? The tweet yesterday, the tweet heard round the world literally yesterday, okay, had no negligible impact whatsoever other than to produce a degree of profitability on one of my trades. Okay. You're just going to be able to flow with the market conditions. Look, I've been rating these windows in the midst of volatility for years. Okay. I am now 19 for 20 in the past 4 months. By the way, I was pulling this up a moment ago. Okay. By the way, this is, okay, the spreadsheet. This is all the open and closed trades. These are open trades. Everything that I've touched recently, okay, has been closed. And it's hard to look at this. And I'm going to show you a lot of my trades. Everything in here recently, okay? There's your loser. I had one loser recently right there, okay? I don't mind, like, look, all the way back here, there's another loser right there. Everything has been closed, and everything has been closed profitably, okay? But it's 19 out of 20 in the last 4 months, because people constantly ask me that. But how do these trades stand up to volatility? Okay, this is a volatile time. This is actually back in August into October. Okay, Here we are. This is actually every $92 invested, I got back 124. It's a 35% return in one day. I'm just showing you a couple of trades right off the bat. Okay. This is actually a trade in SLV, right? Again, back in what? September and October. The reason I'm showing you this is because at these time frames, okay, we were trading a little traffic. By the way, I call volatility traffic. It's trading in traffic. Okay. Volatility was pretty extreme back here. I mean, the VIX actually hit 65. Okay. Crap was getting real. Silver trade. By the way, you don't have to do $86. You could do $860 to return, 1,140 bucks, still 33% return. Okay. Next one on the docket over here, IWM. IWM, every $81 invested, I got back 127. It's a 57% return. Okay. This is Wells Fargo. $70 invested, I got back 106, 36% return in one day. Okay. Volatility is only helping our cause over here. This is a Home Depot spread. Okay. Home Depot. I'm showing you, it's a loss, 25% loss. $198 invested, I got back 149. It's 25% loss. Take that one all day long too. Okay. This is a meta trade. $225 invested. I got back 293 at 30%. Okay. Apple, $170 invested. I got back 233. It's a 37% return. Okay. And again, I can go all day long. These are just trades, okay, that are more recent. This one's a little bit older. Okay. Every $117 invested, I got back 182. It's a 56% return. Okay. TLT, back in that September timeframe, $86 invested, I got back 142. All I was trying to do, okay, this is 65% return, was pick out a couple of real wild instances of volatility. I was just trying to show you trades in the midst of some heavier volatility. How did we do in the last bear market? Well, this is the last bear market. Volatility is good. And again, what I'm showing you here, this, okay, is actually my statement specifically, okay, from Thinkorswim. And again, that's P&L, okay, in 2022. So, and everybody asks me the size of the account in here, okay? I do not mind saying, okay, the account size is basically, this is about 100% return on the account. And of course, everybody asks me how it's going this year thus far, okay? This slow day, I've actually closed most of my positions today. Okay. And recently. So we're doing about $15,000, anywhere between 13. Look how fast it's moving too. This is awesome. I love doing this on a day that we're moving like this. But if you want to see, okay, the reality, this is not about like gloating about P&L and so forth. Okay. Trading in this, okay, you're either ready for it, okay, or we're going to get you ready for it. And that is one of the most critical aspects. By the way, one of the things that I'm so adamant about here at TheoTrade, okay, I'm the co-founder here at TheoTrade. We show everything. This is completely no holds barred, meaning that if there's a P&L, whether I'm up money, whether I'm down money, I will show you every single aspect of it. Okay. And that is important. Okay. How did I do in 2016? In 2016, $523,000. That was actually like record profitability year in recent times. Okay. This was 2016 was just epic. Just absolutely epic. And it was epic because of things like Brexit and so forth, an election, okay, all of these anomaly kind of events. Absolutely huge. Look, you can see why this strategy is what we term Theo approved. What we're showing you, okay, with these profit windows is this is the single most proven track record here at TheoTrade, bar none. There is no other single strategy that has a better, okay, and more proficient track record, okay, than what we're showing you here with 24-hour profit window. And what I mean by that, this particular strategy, okay, I've got decade plus of results, okay, that literally, when I say a decade plus, like I can go back and actually look at trading history for over 10 years, okay, on this strategy. I've been trading this strategy going all the way back to like early times, even of Thinkorswim. So let's get down to it. Turn the corner. What's 24-hour profit window? Okay. One of the first things I'm going to say about this, okay, this is the 24-hour profit window. Poke some fun at this one. This could be the 24-minute profit window right now because the volatility is so extreme. The windows are opening. Okay. You only need that glimpse, that opening, okay, to be able to execute upon it. And we're going to pounce upon some of these windows here. But like literally, like the 24-hour profit window, the irony is this volatility edition here, it's in my estimations become like a 24-minute profit window, okay? Because you're seeing stuff that mathematically you just shouldn't see. And I'm a quantitative trader. So quantitative trader means I'm a math geek. You don't have to be a math geek. You just have to understand, okay? Keep your risk intact. And that's exactly what we're going to show you here. Look, you have a primary confluence of three forces. And I want to keep this as on the surface as possible, okay? And I want to make sure that you guys not only understand, but we're actually going to go live into the marketplace and show you like your trade. You're going to tell me what to do, okay? And I'm going to show you how these three forces kind of come together with some of your picks. Skew, expected move, okay? And GOAT, liquidity. GOAT, what does it mean? The greatest, okay, of all time in terms of liquidity. What these three aspects, okay, which I'm going to show you in much greater detail here momentarily, they come together to open up a window for something like Apple, okay? Now, this, we're getting a little bit more recent. Every $200 invested, I got back 275. It's 38% return. Look at the time frame in here. It's opened on the 25th. It's closed on what? The 26th. Okay. That's why I'm saying it's like, these, 24-hour profit windows, these trades can be held for quite an extensive period of time. Okay. But the bigger the waves, the better we're doing. Again, this can also be $2,000 invested to get back $2,750, 38% return. Before I go any further, it's important to know the debit in the trade is $2. What's the most I can lose? $2. Okay. Here's JP Morgan, $200 invested. I got back 312. It's 56% return. Okay. This is Nike, $95 invested. I got back, okay, 71. This is 25% loss. Nike, bad animal. Okay. This is GLD, which is gold. Okay. Every $145 invested, I got back 231. It's 59% return. Let's go deeper than just showing you a couple of trades. Okay. Let's go much deeper. Why are these windows opening now? Okay. Because the forces are coming together like never before. And again, you've had this confluence opening these windows, okay, for a pretty significant period of time right now. And it's, the irony of that is like, but it's only getting better. Okay. So you've got these forces kind of coming together, and I'm going to show you what those are right now. And they've gotten better, not worse, to the point where you're just like, this is, you're at a peak of the season right now for 24-hour profit windows. First of all, it's easy to say this. Two-sided trade returns. Okay, what's two-sided trade? That's a marketplace, okay, that goes up and down. If you missed the last, okay, let's call it 48 hours. You want to know what two-sided trade is? That's the market that goes down, up and then back down, and then up and then back down. But maybe we're here. Okay. It's out of control. Like all you had to do is basically put on blinders and throw the right trade into the marketplace in the last 24 hours, okay, and you made money. Literally, all you had to do, okay, was understand what this trade is. It would not have mattered whether you were bullish or bearish, okay, since Monday, and you would have made money. It wouldn't have mattered. You could have been bullish. You could have been bearish, okay? You could have been a blind squirrel. As long as you actually had the skills to execute, you made money, okay? I'll actually show you the trades that I did because, yeah, we made money. Two-sided trade. Obviously, volatility returns. At a lot of years, some of those years have been slow. The last real kick in volatility year we had was 2022. Before that, 2020. I'm talking extreme volatility. Okay. So you have volatility returns. One of the ways I look at volatility, okay, is VVIX, and I also look at skew. And I want to actually bring this stuff up. Okay. I don't mind bringing this stuff up because one of the keys to this marketplace, okay, one of the absolute critical keys to this marketplace is found in something called the VVIX. It's the VVIX. And I'm going to give you, okay, a 30-second synopsis of this. what this VVIX does, and it's VVIX, it's the volatility, okay, of the volatility. And you go, oh, that's so geek, okay? Let me put this in the most crystal clear terms that I possibly can. What this thing, the VVIX, the volatility, what it shows, okay, is institutional trading freaking out. When it gets above 110, it's on. Okay. It is no holds barred. Okay. Get under your desk, start rocking back and forth. It's going to get crazy out there. We hit levels, okay, never, okay, really sustained ever before. Some of the highest levels. And by the way, this is, I'm going to pull up the full history of it. Okay. That's like yesterday. That's yesterday. Maximum levels. And you got to look back here, like, what was the 212 reading? That was a 1 second. That wasn't even a real reading. That's the Chinese yuan devaluation. Okay. We are at sustained levels, okay, that we've never sustained before. And what this means, okay, because you want to know, like, who cares? Like, oh, the VVIX, the volatility of the VIX. Who cares? What it means, professionals are hedging. Professionals are hedging. You go, how do you know that? Because this is recording volatility, okay, in the VIX. And the VIX, to move VIX volatility, you got to be a big monkey, big monkey. And one of the telltale signs that volatility was not over yesterday, it came down, but it didn't come down very much yesterday. It was like, just kidding. If you looked the VVIX yesterday, you would have understood, okay, all hell can still break loose in this marketplace. And don't forget it. Doesn't matter where we close right now. Okay. Doesn't matter where we close. Market's still totally wild. Okay. You had to know about that VVIX. Then we come into what's termed expected move. And you're like, well, what's that about? Okay. I'm going to show you something like Meta. Meta, I'm going to apply expected move. Okay. Meta is actually all over the place right now. Meta was actually indicating oversold, wildly oversold, pop back to the upside. Okay. As I said a moment ago, it wouldn't have mattered in the last like 48 hours. You could have been bullish, you could have been bearish. Okay, the answer is yes. The expected move caught it, okay, and caught it absolutely huge inside of a product like Meta. You look at something like Tesla, okay? You know what the irony of Tesla is? With all the chaos going on in this world, okay, it's right where it should be. Okay, it's right where it should be. Can I show you guys one more really cool thing in the expected move? Okay, I want to ask a question here because I told you I was going to do a lot in the live market. I'm going to ask a question here. How many people thought yesterday's move was wild and unprecedented? Okay, anybody? How many people thought yesterday's move was wild and unprecedented? Just a yes or no. So for those of you that do tune in periodically, by the way, there's every single one of us is like, oh yeah, okay. Anybody here that tunes in every Friday afternoon, I provide what's termed an expected move. The expected move this week was approximately $346. Okay. $346. The move to the upside yesterday, one of the most unprecedented moves in the history of markets, was completely handicapped. That line was drawn last Friday. Spot on. We actually hit the upper edge of an expected move. Okay. And you knew at that point in time, okay, even in the midst of the most wild stuff, okay, you just caught like a level out of the blue, okay, at 54.20. It's insane. Even in the midst of the most extreme environment, okay, in modern history, you actually caught a level over there. The expected move, okay, is huge. This is just part of the confluence that comes together to put trades like this. XLU, okay? $77 invested, I got back 123, it's 60% return. XLY, every $84 invested, I got back 113, it's 35% return. Okay. Then we're jumping forward to what? Morgan Stanley, every $95 invested, I got back 155, 63% return. And one of the final confluences in here, okay, is the goat of liquidity. Now, I talked about the goat of liquidity. Now, we're going to start taking some of your, okay, trades. Let's build a trade. Here's what we're going to do. Okay. I'm going to show you a couple of my trades. Like, look, okay. This one, every $91 invested, I got back 120. Okay. It's in the XLV. Again, I've already pulled up the XLV like 3 times. I trade the same stuff again and again and again and again. Okay. We're going to look at some of your ideas. What I want to know, okay, what stock do you want to trade? Okay. What stock do you want to trade? And we're going to look, okay, for a setup for your stock, but it has to have the greatest liquidity of all time. If you throw in a stock called like, I would like to trade Joe's tree cutting service, okay, it ain't going to work. It ain't going to work. And I'm going to tell you right now. So I love some of the stuff that actually comes up in here because somebody initially, okay. So here's IBIT, okay. Just bear with me for a second because I want to show you something that's interesting, okay. As you start to actually bring up individual stocks and individual products, okay, because again, I'm using your stuff in here, not my stuff. This is going to be actually all your stuff, okay. I open up and take a look at this, and I'm going to tell you right now, okay, all right, can this be done over here like a Bitcoin ETF? Absolutely, okay. There's also BITO, so you could definitely execute if you wanted to into this particular product, right? And it's the first, by the way, that's literally the first one that I saw pop in over here. Okay. That's the first one I saw pop in over here. And I was like, oh, okay. Because I know the product, I know it well. All right. And you're looking at it in 36 days out, and there's tens of thousands of contracts actually trading in here. Okay. The only reason I'm looking at the chart is to apply auto expected moves. So let me ask you the next question. What do you think? Are you bullish? Are you bearish? Okay. And it's okay. It is okay because what we can actually do with this particular strategy, we can execute you on either side of trade. Okay. Either side of trade actually can be executed upon. So if this thing is trading in and around like the 45 level, okay, we're just going to go ahead and build. And I want to show you like really interesting like idea over here. Okay. So here's a quick trade. Now that's a 36-day trade. This one happens to be bullish. Okay. This one happens to actually be bullish. Do you think I really care whether you're bullish or bearish? Okay. I'll execute this one all day long. But then the next question is, why do it? And I want to show you something. Why do it 36 days out? Maybe I should give myself some more time just in case the market has to recover. So what I want to show you about this strategy that's so important, okay, you realize I could jump all the way to June and the trade is actually going to cost me the same or less. Okay. So don't tell me like, oh, but what about time? Okay. What about time? Okay. What about time? Maybe I should do it for June 20th. Maybe I should do it for the May 16th time frame. Let's get crazy. Maybe I just think like it's going to be bullish over like the near term over here. Okay. Think about that. That was an easy one. Absolutely easy one. People overthink this. They totally overthink it. Okay. And what did I have at risk in that trade? Let's do it again. Let's bring up this 45. Okay. Let's bring up a 45. Okay. 47 spread. So this 45, 47, and it's trading basically, let's lock it down right here at 92 cents. And there's always one in the crowd. You would never fill at that price. Okay. Want to see if I'll fill at that price? Let's find out if I fill at that price. Okay. I don't know. I don't even know who put this in here. Let's find out if we fill. Oh, turns out we can fill at that price because there's always one in the crowd. I just wanted to make sure that everybody understood that. By the way, I will never shy away from actually executing. Oh, I filled at 92, but can I fill at 91? Let's get crazy. Okay. Can I fill at 91? I don't know. Look at that. So I just showed you right there. Okay. Now you can fill at 91 too. So now we're having fun. Creating a duplicate order over here. What's the max I can lose on that one? If I do one contract, capped in one lot rides again, I can only lose $91. I can only lose $91. Okay. That's it. If I wanted to do one contract, if I do 10 contracts, I'd have like $910 at risk. Okay. Ooh, hurt me. Do it again. Okay. Now somebody came over here and they said hood. All right. All right. So throw this out. This is Robinhood. It's Robinhood. And actually, I am going to throw this out as well. Okay. I no longer actually will trade this. I will show you something in here, but I'm no longer traded. I'm a little too close to the gentleman that actually runs the entire firm. I did trade this for a period of time, but I've had a lot of recent conversations with them. I'm really not comfortable trading it. So just throw that one out there for you. Okay. The higher the volatility, the better a firm like this typically does. I will say that. Okay. But something like Hood, to me, okay, you're talking about the goat of liquidity, and we can look at all these factors. I'm sorry. One of the factors actually doesn't exist. I wouldn't do this trade. I would not do this trade. Okay. And by the way, I'm not an insider over here, but I actually do know quite a number of individuals that don't just work there, that they run the firm. So one of my top guys that I worked with for about the last, for 15 years at like Thinkorswim, TD Ameritrade, and we even knew each other from the trading floor, runs their operation over there, which is awesome. Okay. So a couple of people with some Tesla in there. You know what? I like Paul. Paul came in here with a Home Depot. Okay, let's get crazy. Let's go into Home Depot for a second. I say, let's get crazy. Have you guys seen this thing lately? Okay, it's a debacle and a half, right? But it's got a bid back under it. Then all of a sudden, it's got earnings out here, right? There's a lot actually to be concerned with. But then we apply auto expected moves. Now the profitability windows are open. You know what's cool about Home Depot? It is massively unchanged, massively unchanged. So in Home Depot, what do you want to be, bullish or bearish? Okay, what do you want to be? You tell me. You want to be bullish? You guys want to be bullish? You want to be bearish? Okay, bullish or bearish in this one? Okay, maybe I come out here and I say, you know what? In the near term, look, from the near term, I'm going to be a little bit more bearish. This is a 250 wide spread for like a buck 15. Fire at will. Okay, good, done. Oh, look, I filled that one too. So it's game on right now. I just did a bearish trade in Home Depot. Okay. Again, I like somebody said both. Okay. Do you realize though, and I love that somebody said both, because what can happen, right? In the next 7, 10, 20 days. I could have selected, some 30 days out there. What could happen? The answer is anything. Anything can absolutely happen. As long as you're in the go to liquidity, okay, anything can happen. You know what the irony of the Home Depot trade is? Okay, the answer is yes. Both of those probably can happen, both bullish and bearish in here. We just run the list. I just traded into Costco earlier today. This one I actually went 71 days out on. Okay, obviously I see something in there. I can go all day long. Why? Because right now, holy crap, these windows, they are open. Okay, people, they are open right now. You're in a VVIX that's in Never Never land. Okay, for those of you that understand even skew, for this kind of environment, skew, it's like a distortion in pricing. A 42 skew with the market selling off like this is crazy high. Like this is just, again, this is an epic environment. And it brings trades like this all day long. Okay. New 24-hour profit windows are about to open up. As I said to you a moment ago, okay, they're not about to open up. They're open. I mean, again, I could trade all day long. Let's rate them together. This is a trade in XLU, $85 invested. I got back 139, 64% return. Here's actually a Tesla spread. Okay, Tesla spread. And by the way, I want to make something very clear. Okay, I'm no longer showing you any older trades. Let's just show you stuff that I've closed, okay, literally in the last month. If it hasn't been like done in the last month, screw it. This XLU trade, $85 invested, I got back 139, 64% return. Okay, that's the oldest trade I've got in here right now. It's, April 10th. This one was actually closed, what? March 6th. So remember, $850 would have gotten you back 1,390. Okay, here's a Tesla trade. Tesla trade was actually closed. Well, this thing was open for 2 whopping days over here. $116 invested. I got back 167. It's a 44% return. It's a 44% return. Okay, but take a look at the time frame of this little monkey. Okay, I just drew directly over it, but look at this thing. It's open for 2 days. 2 days and 44% return. Okay, and that's a bullish trade. Again, I got a bearish one. I got a bullish one. Okay, let's go back to Meta. Okay, you've seen Meta a couple times. This Meta trade just closed, like what, 2 weeks ago? $230 invested. I got back 305, 33% return. People, it's a 33% return, okay, literally in 3 days. I think I opened that one on a Tuesday and closed it by that Friday. Does that sound about right? Okay. That's basically what we're looking at over here. This is an XOM, ExxonMobil. Okay. This one actually closed on March 19th, $97 invested. I got back 153. Here's one of the coolest things I want to tell you about ExxonMobil. I love this trade, and I'm going to show you why I love this trade. Okay. Let me show you the ExxonMobil trade on the chart. Okay. We're going to the charts. In the ExxonMobil trade, okay, and again, I opened it on what? February 19th and closed it on like March 19th. Okay. So I opened it on February 19th. Let's just zoom in. Don't even worry about some of the volatility that we've seen. I opened it, okay, on February 19th, which is right here. And I closed it on March 19th, okay, which is right in, okay. And again, you're looking at it, it's right up here. Do you realize that everything, and this is a bullish trade, everything in the forces of evil went against me inside of ExxonMobil, and I still pulled out profitability? Okay. Everything went against me, went wrong. This was a bullish trade. Okay. Those shares did nothing but sell off. Okay. And still pulled out a 58% return. You're like, how's that even possible? Because I only had $97 at risk. Here's an EEM trade. EEM trade, $88 invested. I got back what? 132. It's a 50% return. Okay. Here's a Goldman Sachs trade. Here's another one, Goldman Sachs. Okay. By the way, Goldman Sachs, I am required to only take bearish trades in here. I can't do a bullish trade. Okay. I can't do a bullish trade, Goldman Sachs. Okay. Why? Because it's Goldman Sachs. But I want to show you the Goldman Sachs trade. Because the Goldman Sachs trade, this is such a cool one. It was opened on March 17th and closed on the 31st. Okay. Again, these are recent trades. Recent trades. So I opened this one right in this neighborhood here. Okay. And I opened up I opened up a bearish trade here. We went straight up and then fell flat on our face. Okay. Winner, winner, chicken dinner. Why? Because I had the right strategy. I was capable of actually holding it. It's 58% return. Okay. Costco. Is that recent enough for you? $218 invested. I got back 343. It's 58% return. Okay. And again, when I say that recent enough for you, how about this one? This one just closed yesterday. Okay. As I said, these windows are open right now. This is the energy sector. In the energy sector, what did I do? I put on, okay, and again, this is wild. I put on a bullish trade. Look, the trade before in Costco, okay, is bearish. Closed in the 7th. Bearish. Great. Lovely. The next trade, XLE, this one's what? It's bullish. Okay. When did I get out of it? Yesterday. That tweet took me out of trade and took me out of the trade 2 days after I put it on. In the most bearish marketplace that we have actually seen in recent history, okay, it took one bid back. Okay. The market flew to the upside. Out of the contest. 30% return. Look, here's what we use to actually trade these windows. Introducing in-out advantage. These, okay, are in-outs. These are in-outs. I use the in-out advantage to raid the windows. Get in, get out, okay, of the profit window, and just keep doing that. Here's some of the advantages. And this stuff's important. No one is here trading stock right now. You trade stock, you get run over. Okay. You define your risk. And when I say define your risk, the trade down below, okay, this trade down below is 78 cents. In fact, why use the trade down below? Okay. Some of the trades I just filled. And again, I filled a bunch of stuff today, right? The trade I put on here in this Bitcoin ETF was $91. That was it. It was $91. Okay. What's the most I can possibly lose? $91. The trade I put on, okay, in Home Depot, what's the most I can lose? 115 if I did a one lot. Capped in one lot. Okay, that's it. That defines my risk. Risk then can be tailored. If one contract has $91 at risk, okay, I can appropriately tailor that to anything that you're comfortable with. You will never use a stop order. I don't ever want to hear the word stop, ever, okay, using this strategy. Never, ever, ever. You're like, but I have $91 at risk. If you feel, okay, that you need to further, okay, define your risk in an already defined risk trade, you're doing something wrong. You're doing something wrong. And I want to show you that. Like, people are like, but I need a stop order. Look, if you think you need a stop order, do less contract size. Put it up there. Like this trade I have on the screen right now, this one's got $78 at risk for the one lot. How many do you want to do? How many do you want to do? You want to do 5? Okay, basically 5 times 8 out there, you're going to have $400 or $500 at risk. Commissions, negligible. Not even a question in here. You can vary time frames and not pay more. You just saw me playing around with like that Bitcoin ETF, and you saw me do the Costco trade. The Costco trade, I'll show you something interesting. Costco trade, I did this earlier today. The Costco trade was all the way out to June 20th. The Bitcoin trade, okay, the Bitcoin trade, what was that? That was actually there. Take a look. It's May 16th. And then I just did the Home Depot trade, but that was April 17th. Oh my, I don't know what to do. Okay, I'm going to tell you exactly what to do. You're going to vary time frames, not pay more. probability of profitability is sky high. The higher the volatility, the better this is going to go. The higher the volatility, the better this is going to go for you. Okay. Each trade approximately has about a 72% probability, okay, of making its profitability. Each trade, again, has about a 72% chance, okay, of hitting its profit point. It's the perfect trade to reduce risk of a stock portfolio. Right now, if you still have a stock portfolio, okay, yeah, but you might want to put this, okay, in there. Do not freeze up. Indecision right now is going to cost you more than the wrong decision. That's the point I'm trying to make. Once these windows are open right now, fire, execute, execute, execute. It's an excellent tool, okay, to build returns in a smaller account. You can do this in IRAs, okay? You can do this in any trading account, okay? Any trading account. You don't have a lot of time, no problem, okay? Every single trade that I am showing here today, right, is something that I actually blasted out, okay? These are alerts. Every single trade has actually been shot out to the masses here, okay? Trade results are perfect for part-timers. All of these you can also use hands off. Once I send out a trade, you can actually go in here and go set and forget order types, which is what we term a GTC. What's GTC mean? Good till cancel. So even a fraction of your time is enough to see, okay, spectacular results off here, okay? Why in-out is built for this moment. First of all, it reduces volatility risk. When somebody says reduces volatility risk, what's the most I can lose in this trade? 91 bucks. Where's my volatility risk? I want to know, where's my volatility risk? Because people say in options you can have a what? A party? I'm up like 11, 12 grand today. In options you can there's no volatility risk in here. I don't have volatility risk right now. Why do you think I'm using this strategy? In out. Okay, one in the money, one out of the money is actually designed to mitigate. It's designed to mitigate the volatility exposure. Gives maximum control over your capital. If you ain't comfortable, okay, it's because you actually allocated too much. It's so easy though, because you know you have $91 at risk. That's it. It's $91. The probability of profitability increases in periods of high volatility. That's what I said. Like you can kind of go in there with a blindfold and chuck trades on in this volatility. You're like, I'm wrong tomorrow, but I'm right the next day. Okay. And if you love me now, you'll hate me tomorrow and then love me on Monday. This in-out is built for the extreme. And people, that's why I said this is the volatility edition here. Okay. In-out is the extreme. It is built for this. Introducing, okay, in-out trade alerts. The in-out advantage has lifetime access. It's $9.97. Okay. I'm the trader for it. When I trade, what do? Fire. Okay. What do I fire out? Well, exactly what the trades are. Now, I'm going to give you everything that's actually included in this. When I say lifetime access, okay, it's lifetime access. So I'm the instructor and trader for this. In-out advantage weekly trade alerts. So we're going to do, okay, at the absolute bare minimum, one trade, okay, every single week. That's absolute bare minimum. Lately, okay, obviously you've just seen a bunch of trades. I just ran through a bunch of trades that I've done. Okay, if you went back to these trades, all of these trades were very, very recent, closing like literally in the same day over here. Okay. And again, the reason is because I've been doing a lot of them. I've been doing a lot more of them right now. So you're going to receive the trade alerts for how long? For a lifetime. You receive trade alert. Okay. So you're going to get at minimum 52 alerts in a given year. Okay. In addition to that, you're actually going to get the full, what we term master class. Okay, so there's a full class specifically on this, and we're actually going to give you the archive to that particular class. Okay, we're also going to give you an archive to a 12-week mastermind. Every detail of this strategy completely, okay, broken down for you. There are some people, okay, that are going to come to the in-out advantage lifetime access, and you say, look, I don't really care about the class, man. Just give me the trades. I'm cool with that. Then just take the trades. Okay, and that's fine. Just take the trades because you've got them for a lifetime. And then there's some people that are like, I want to see how the sausage is made. If you want to see how the sausage is made, okay, what you're going to do is you're going to watch the master class. Okay, so we give you 12-week mastermind. We're going to give you weekly updates. Okay, forever and ever and ever. As long as I'm kicking over here, I'm going to be doing updates every Friday. Okay, every Friday, I shoot about an 8-minute video updating you on every in-out that I'm in. Can I show you something crazy right now? Okay. This is the first time in an extremely long time. If you look right here on my screen, see where it says in-out spread trade tracker, there's no positions. Want to know why there's no positions? Every single position that been in has closed profitably. Every single one of them. Okay. I'll be firing more. Okay. Well, I'm just waiting for my wave right now because I've been closing stuff, literally putting them on, close it, put it on, close it, put it on, close it. That's how it's been. Okay. It's been good. It's been really good. So on those weekly updates, in 8 minutes, I'm going to give you every move that I've made for the last 7 days. And then we'll do it the next week and the next week. And you only have to sit there for 8 minutes. Okay. If you want detailed instructions, as I was saying a moment ago, there's some people that just want the alerts. I don't care about all the other stuff. That's cool. There's some people that want that weekly video. There's some people that want to learn to do this themselves. If you want to see how the sausage is made, we'll show you exactly how the sausage is made. Others of you, you have never had experience with options. You have no idea what an option even is. Okay. Look, we have a quick start beginner's guide. This is going to go options 101, options 201, options 301. Everything you're going to need to get started is right here. In-out advantage, quick start beginner's guide. Okay. I don't want you to think that you have to understand the options world, okay, to be able to put these trades on. And people, look, we'll even talk about the brokerage firms because some brokerage firms are like, oh, maybe I don't know if I can do that at my brokerage firm. You can do this. Okay. We'll help you do this. You get the master class. Okay. You get the trade tracker. And you said, what's the trade tracker? Trade tracker is actually what I was bringing up earlier. Okay. It's this. It's a spreadsheet. By the way, this is actually the real spreadsheet. It looks much better when it's on our website, but this is actually the spreadsheet. Okay. We built a spreadsheet inside of Google. Okay. And we display it. Like you get to see every single trade. That's what I said. Like it's no holds barred over here. You want to see my P&L, you want to see everything. I'll show you my account statement. Okay. Cash sweep vehicle. Okay. It's all right there. Like I have right now, I'm running $381,000 of positions. Okay. Sounds good to me. So I'm literally running $381,000 positions. I will let people see every detail of my account. Okay. There's nothing that we don't show here. And it's such an important concept that people overlook. Okay. Somebody's going to educate you. You want to see everything they're doing. I'll show you everything I do. Auto expected move. Of course, we're going to give you the auto expected move script. We actually can build that for a couple of different platforms now. Now with all of this, okay, this is lifetime access, 30-day money back guarantee. Okay. Look, 30-day money back guarantee. It's only $1,000. Care less. In the next 30 days, come check everything out. Watch the class. Watch 12 hours of the mastermind. Get a couple of trades. If it ain't for you, get your $1,000 back. We want people that want to be here. I always say that. We want people that want to be here. There are no stipulations to the money back guarantee. You don't care. It's $1,000. Okay. We're here because, again, most of us that are here at TheoTrade, okay, we're like, this is like a home for like wayward traders. Most of us actually came from trading floor, Thinkorswim, TD Ameritrade, okay, a couple of different walks of life. But this is what we do day to day. We sit and we trade. You might as well follow along with us. By the way, when you see me do a trade, okay, you're also going to see 5,000 contracts come in behind me. Okay, it is phenomenal size. And we only trade the most liquid stuff out there. Okay. By the way, with the money back guarantee, there are no excuses. There's no questions, no commentary. Look, we want people that, as I said, want to be here. Okay. But we also understand that sometimes life gets in the way. So email us anytime. You don't have to, by the way, to get your money back, you don't have to like call us, between the times of this and this. Forget all that crap. You ever try to get out of like a gym membership? Even better, you ever try to get out of an Amazon membership? Amazon membership. Okay. I defy anybody to try to get out of that. Like try to get out of like an Amazon membership. You can't. Okay. Here, you send us an email. You're good. Okay. We want, again, people that want to be here. Email us anytime. 30-day money back guarantee. And it's, again, we do that because, this is the place that traders go. Okay. When they know what traders are doing. Like when traders want to find other traders, this is the place you go right here at TheoTrade. Okay. 1 alert per week. It's about 4 alerts a month. It's a little bit more than that. It's closer to 5 alerts a month. And right now we're rocking 52 alerts a year, 520 alerts per decade. Value, probably like $3,000, $1,000 a day. By the way, pull up the site over here. There's somebody who was asking about this and we posted this in there. Okay. But I want to pull this up. This is, again, it's theotrade.com, theotrade.com/out. O is an out. U is an out, T is an out, steotrade.com/out. If you need to get a hold of us, there are some people that are not comfortable putting anything online. That's fine. Okay. Need to get a hold of us, 623, or if you have questions, you can ask the questions in the chat room, which I will answer, or Jeff will answer. A few of us are actually in there answering questions in there. Okay. You can feel free to ask questions in there. Okay. Or you can call them 623-244-5657. Again, I will repeat the number. It's 623-244-5657. Okay. That's important to us. We want to make sure that you guys are comfortable. Okay. That you get all your questions answered. As you scroll down to the bottom of this, the reason I'm pulling the form up right now, put a viable email in here. Okay. Very, very important. Why? Because the email address, we're going to text, we're going to do push notification, okay, and we are going to email. So we hit you, okay, with 3 all basically at one time. You can select what you want. Put a viable email. The only reason I say that is a lot of people will like hide the email behind like, like a Mac. If you're a Mac geek, you'll know exactly what I'm talking about. Put a viable email address in. Really important. Put a viable phone number in, very important. Okay. The text that come from a couple of different area codes. Generally speaking, the texts that come to you come from Arizona area codes 623 and 602. Okay. Area codes are where they predominantly actually send texts. But somebody was just saying a second ago, well, I'm over in Singapore. If you're over in Singapore, first of all, it's like 2 o'clock in the morning there. It's exactly, or now it's 3 o'clock in the morning. It's exactly a 12 hours difference than I'm on. I've spent a lot of time in Singapore, so know the exact time frame over there. If you're over in Singapore, you can't get like a US text message. So what you basically do is you get an email and a push notification. That's why we actually send that. Okay. Well, that's why we send it. Next thing in the docket over here. Okay. Single payment of $997. You can do 2 payments of $500. We don't care. There's still a 30-day money back guarantee. Okay. So it's a 12-week mastermind. Okay. 12-week mastermind. Brandon Chapman is much more, Brandon's more methodical and more chill than I am, okay, by a multitude of 10 times. And he's the right person to take you through the thought process, the methodology, the logic, okay, of the in-out advantage. So this mastermind, it's ready to go. We just recently recorded it. We cleaned it up. It's ready to go. It is on demand. You can literally start watching it now, today, okay, which is phenomenal. In-out, okay, we're going to teach you to structure a trade. Okay, he'll actually give you advanced in-out setups. So what is the viable setup? It's the one aspect in here, okay, that I didn't spend too much time on. Because when you start looking at these auto-expected moves, the auto-expected moves, okay, like this is 1 breach to the downside, 2 breaches to the downside, okay, you're expecting a pop at that point, and you got it. It's wild stuff. We're going to explain to you exactly how, okay, the in-out advantage sets up. We're going to show you the single most viable setups, not just like, throw a trade on Home Depot. By the way, there's a specific reason I did Home Depot. There's a specific reason I actually did the Bitcoin. Okay. It's set up beautifully. It's set up beautifully. So I didn't mind putting those trades on right now. We're actually going to get to structuring the trade. Okay. Advanced in-out setups, executing upon your in-out plan. Okay. You have got to have an execution plan. We got to know how much capital you got at risk. Again, this is a $2,000 value. This is all part, okay, of the in-out advantage lifetime. All part of it. Okay. On demand, 24/7 lifetime access, meaning that the master class, this is a class that's approximately 3 hours long, includes like a whole Q&A section. You have access to this forever. Okay. And this is the origins of in-outs. It's going to teach not just the strategy, it's going to teach the unique criteria. What literally is in that sausage. And it's actually going to unwind every detail of this trade. You guys, I'm telling you, you're going to absolutely love the masterclass. If there's one thing, I'm a big believer, like I think you'll be more effective in this strategy having gone through the masterclass. Okay. And that's my own belief in here. Okay. Is that you're going to be a lot more effective. Okay. When you have taken the time to actually go through the entire masterclass. Okay, because again, I put a lot of weight into some of the classes that we put together. Now, this is weekly position updates and upcoming opportunities. Okay, this is the 8-minute video I was actually referencing. Every Friday morning, like tomorrow morning, I'll shoot this video. Okay, in the video, I'm just going to talk about some of the trades that I'm either in and some of the trades I'm about to put on, like what's setting up. There could be 4 or 5 different setups I'm looking at. I'll go through the 4 or 5 different setups. That way you can kind of almost anticipate when I'm actually going to put the trades on. Okay. This is something that, again, we just shoot it out to you in an email every Friday, usually comes out like mid morning. I shoot it first thing in the morning, comes out like mid morning, and you're off to the races. Okay. It's another $1,000 value. And we're giving you this. Okay. It's unlimited access, meaning like it's forever access. And that is a big portion, okay, of what we're doing right now. Because look, people in out spreads. Okay, this has been, the go-to strategy. As I said, this Theo approved strategy since pretty much the beginnings of Theo trade. Okay, I like that. Terry's asking, how good is my health? Because it's forever. Okay, looking pretty good right now. Looking pretty good. Okay, especially when I spend time here on the island. I like the island. I chase chickens, chase iguanas. Okay, for those of you if you missed this earlier, I'm in St. Croix, U.S. Virgin Islands. By the way, there's nothing but like in my neighborhood, it's like a few attorneys, partridge in a pear tree, and a couple of iguanas running around. That's about it. Okay. Next, okay, this is the quick start beginner's guide. This is not leaving anything, no guesswork in here. Okay. This literally is a step-by-step guide, totally beginner friendly to take like, hey, I've never traded in this business before. Okay. Where do I start? And that's exactly what the quick start beginner's guide is designed to do. Like literally, A, B, C, and it goes through methodically. And these I actually did put together. And I think they're instrumental in walking people through, okay, some of the basics. Even some of the most extreme traders in here, okay, you could probably use a great, okay, refresher course on there. I think it's really important. Okay. A couple of the names that are coming through over here, and I'll start reading them off. We're starting to see, by the way, um, it takes me anywhere from 5 to 7 minutes to see as you guys actually enroll. By the way, I love the question. What side of STX am I on? Okay. I'm Northeast. Okay. I'm on the Northeast side I'm right next to the Buccaneer Hotel, if you guys know where that is. So I can probably throw a rock and hit the Buccaneer from here. We're only a 26-mile island. Not much guesswork as to where we are. Okay. By the way, I appreciate Maurice came in here and said, yeah, I am on Schwab TV, each week, but I do some of the trades, some of the in outs on here. Okay. I never give like the best of best trades. The only really stuff that I send out, okay, is the stuff that I send out to our clientele. Some of the stuff that's like on the fringe is usually the stuff I mention on like Schwab TV. So we do a couple of trades every week on Schwab TV. All right, onward from here. Okay, real-time portfolio updates. When I make a move, okay, you get to see it. All right, so you get to see it, and we update each move that I make right here. So you can see it. I just closed this trade yesterday. Okay. Oh, I put in today's date. I apologize. That is okay, incorrect. So I found a mistake. I've made a mistake in here that was actually closed yesterday. So the XLE trade was closed yesterday. And for the first time, okay, that I can recall in any recent history, I don't have a trade on right now. Okay. I literally don't have a trade on. What happened with all the rallying and selling off and rallying, it cleared all of my positions out. Like, I mean, and by the way, when I say cleared them out, people, it cleared them out in a very good way. Okay. In a very good way. It just, I'm at the point right now where, yeah, look, I'll get back on the horse and we'll find some decent trades. So real-time portfolio updates is part of it. As I said to you, we're sending the trades out to you via text message, by a push notification, okay, and by email. And all you do is basically when you get the email, okay, you can click a link in the email and it takes you, okay, directly to the trade, which is very cool to me. I think it's anything worth doing, better have some decent technology behind it, and we're pretty big about that. All right, onward and upward. Okay. The expected move indicator. In the expected move indicator, okay, this is an indicator that we've talked about. I talk about it every single time, literally every single time that I am live on, some of the weekend updates and so forth I do on YouTube. Okay, any of the videos, I'm always talking about the expected move indicator. What you're looking at in here with the expected move indicator, okay, is it's how option markets are handicapping forward risk. Okay, it's how the option marketplace handicaps forward risk, and it's a great indication of what's going on, in terms of like our market's kind of getting ripped apart. Okay, because people use overbought and oversold indicators all the time. Okay, it's this is a skin in the game overbought and oversold indicator. That's one of the many uses for expected move. But the way to basically explain it is if you use a MACD, use a Fibonacci, use a Bollinger Band, those are all looking at stock data in the past to predict the future. Think about that for a second. Every indicator that you use is predominantly looking at stock data in the past to predict what's going on in the future. The options marketplace, expected move is the options marketplace. And options, what are the options doing? Okay. Just look for a second. What are options doing? 36 days out. It's giving a price tag on risk 36 days from now. Okay. So what we do is we actually take the data in options and we project forward. Okay. How do you project forward? Because there's $1 billion that says we're supposed to be, okay, between this line and this line. Billions of dollars are trading. And look, we're outside of it right now. Why? Because something unruly happened. It's really like when you start getting into the expected move indicator, you don't necessarily have to have Thinkorswim. Who cares? Okay. This stuff, by the way, you're like, well, but I don't have that platform. Come on, it's on Tasty too. Tasty has expected move. Okay. Tasty, the expected move is right over here on the right hand side of the screen. Okay. You'll see it populate here in IWM. There it is, $1.99 in IWM. They have all the same stuff. Okay. So you don't have to necessarily have, okay, like Thinkorswim. It's okay. We'll show you how to do this on a number of different platforms. That's important to me. Okay. But it's a look forward. By the way, I'm going to read off a couple of names as they come in over here. As I said, it takes me about 5 to 7 minutes before I can see your enrollment here. Richard R. from Pennsylvania. David T. from Canada. Speaking of Canada, if you have any trouble with the brokerage firms up there, shoot us an email. We have some suggestions for brokers if you're in the Canadian region. It's funny because like Canada is like one of the most difficult places in the world. Okay. Like Canada just locks down your ability to trade over there. So we can help you out. A couple of different brokerage firms will suggest if you're up in Canada. So that was Dave T from Canada, Saeed D from Missouri. Okay. Alexander P from Florida. Okay. You're not too far from me. I can almost swim to Florida. John A from Colorado, George H from California, Ed M from Pennsylvania, Brian C from California, Weston C from Texas, Marcus D from New York. This is just the first batch I'm actually seeing. I'm just letting you know. I see you've enrolled. Okay. And the reason I read these off, if you don't see like a username and password, like check a junk mail, make sure. Okay. Otherwise, you could always email us if you have any problems, support@theotrade.com, and we will get you taken care of. Okay. So everything you get, trade alerts. I mean, one of the primary reasons people do this is the trade alerts, right? You're getting about a trade alert a week. If you start breaking it down, and like, look, it's like $1,000 for the thing. Okay. Start breaking it down for the last, couple of years, 3, 4 years goes by and you're still getting trade alerts. You'd be like, that's the best $1,000 I ever spent. So you get trade alerts, 12-week mastermind, the master class, obviously. The mastermind is huge too. Because Brandon, as I said, he's far more methodical than I am. I think that that's a fair term, methodical. Okay. He's a little bit more deliberate and a little bit more methodical than I am. And I'm telling you, he's the right guy for this. Okay. the masterclass I put together, and this has all the criteria. There's a checklist, literally a checklist of criteria to go through before you can put these trades on. Expected move, weekly video updates. That's into forever. Okay. The beginner's guide and the Theo trade tracker. Again, all it's $1,000, $997. Okay. It's all listed right here. Again, there's a 30-day money back guarantee. If you need us, call us. And I keep stressing that if you need us, call us. Okay. And when I stress if you need us, call us, there was somebody that just asked again a moment ago inside of chat over here. Okay. That what's the number? 623-244. Okay. 623-244-5657. Once again is the number. As I was saying on here, okay, there's 100 spots on the 30-day money back guarantee. Okay. One of the big bonuses in here as I kind of jump back to this. Okay. Brandon is less caffeinated. Okay. I'm trying to caffeinate him. Okay. One of the big bonuses in here, we'll give you unlimited email mentoring. Okay. Meaning that you actually sign up for this. And this is pretty crazy, but if you sign up for this, you can email us, okay, forever, which is completely insane because, eventually we'll have 10,000 people and we have to, obviously, we're going to be hiring and bringing on more and more traders. But we've been doing this now. Theo Trade has been around since 2016. Okay. Thousands and thousands of people, okay, are following the in-out advantage. Thousands. You guys are going to be shocked. When I place a trade, okay, I'll fire like a one lot. Then I'll send the trade to the masses. Okay. I'll wait for you guys to start trading it and then I'll trade with you. I never front run you ever. You will always see me trade one, maybe two, and then wait for the text message to go out. Everybody gets to get in at the same exact time. What you're going to be amazed, okay, is the sheer magnitude, the number of people that do the trade, okay? You'll see 5, 6, 7,000 contracts trade on a strike by strike basis, which remember, back to this, I said there has to be the GOAT of liquidity. It has to be the greatest of all time. Did you notice when I was going through like some of the trades earlier? It's like I go through some of the trades earlier. You totally recognize like all the products. Like, look, okay, this is the XLU, and then Tesla, and then Meta, and then ExxonMobil, and EEM, and Goldman Sachs, and Costco, and XLE. Okay, you notice why we do that? Okay, because you can only trade the biggest and baddest of the products when you're doing 7,000, 5 to 7,000 contracts every time you send a trade. Okay, you better believe I'm not trading something you haven't heard of. Okay, it is important. Okay, very, very important. Anyway, let's get into it a little bit here. So 30-day money back guarantee. If you need us, call us. Okay, theotrade.com/out. Once again, we're going to work with you directly in here. Okay. Now we literally incentivize people to enroll for this. There are 100 spots on the riskless deal. That's why it's a 30-day riskless deal. We make it unlimited email mentoring is a huge bonus in this one. Okay. With the unlimited email mentoring, I want to make one thing clear. Send us your trades. Most of us, okay, are more than confident and comfortable, okay, answering trade related questions. So if you've got trade related questions, okay, we'll absolutely be more than capable of answering those questions for you. All right. So a little bit of Q&A over here. I want to make sure that everybody gets their questions answered over here. By the way, I see another couple of names coming through here. Marcus D from New York. Okay. I think I see Karen S and Alan G. Just reading off a couple more names as they actually come in. As I said, it takes about 5 to 7 minutes before I actually see your name kind of populate in my screen. People always ask what you need to get started with this, and the answer to that is, okay, it's really straightforward. Like, you don't even really need a laptop and an internet connection. Okay, you could do everything that we're doing right now off of a mobile device. Okay, everything we're doing right now off a mobile device. So that's never going to be an issue with, you don't necessarily have to have a laptop. You don't have to have like a super secret, like special iPad. Okay, I think iPads are going up in price right now, huh? Hmm. Um, we have everything you're going to need, and I'm always going to say this. If there's something that you need that we're not providing, we want to know about it. Next, this is not a membership. This is lifetime access, period. This is not a membership. This is lifetime access. So $1,000 lifetime access, get all the trades you want. Okay. There's no better time in the midst of volatility because I'm going to tell you right now, this is the time to do it. Okay. We're now providing Trade Tracker weekly video updates. 8 minutes. Give us 8 minutes. We'll give you everything that I'm actually doing over here. We're going to provide you access TheoTrade Mobile. You can actually download archives, view at your leisure. The TheoTrade Mobile does the push notifications on here. Add your cell phone number when enrolling. Let's come back over here again to the enrollment, right? To the enrollment page. Make sure you have a good email address and a good phone number in here. You select payments, like, if you want to do that, is fine, whatever. Okay, there's no real difference to us. And again, either or, you still get the 30-day money back guarantee, but that 30-day money back guarantee, okay, the 30-day money back guarantee is for the first 100 people, okay, that enroll. Onward over here, okay. I don't have a cell phone. No cell phone, okay. If you don't have a cell phone, all right, let me guess, you have a smartphone? No, you don't have a cell phone. You'll be okay, but you might want to sit in front of your computer a little bit more often, okay. All right. Add your cell phone number. Again, you get text messages, push notifications. Okay. You can email us anytime, receive a response within 24 hours. Okay. Including trade related questions. When you send trade related questions, okay, go to support@theotrade.com. Again, go to support@theotrade.com. Okay. Very, very important. Variations of all the trades are available inside of an IRA, retirement account. Okay. And here's something critical. This is the first time I mentioned the IRAs and I mentioned various accounts. This is the first time I'm saying this. $2,000 is all you need in the account. Okay. $2,000 is all you need, okay, inside of the brokerage account. And we can help you get approved for options at several major broker dealers. So if you have a problem and you're like, well, this brokerage firm won't do this and they won't do this, and Fidelity is mean to me, we get it. We got you covered on that one. Remember, there's 100 riskless spots. Get results, take action, enroll for TheoTrade now. We'll be here for the next 10 to 15 minutes answering questions live inside of the chat room over here. Look, people, there's a lot of volatility. Do something about it. Don't just sit there deer in the headlights with us. Okay, check us out. It's theotrade.com/out. I want to thank each and every one of you that have enrolled today. Everybody for joining us today. If you have more questions, we'll be here to answer them live inside of the chat room. Thanks everybody for tuning in today. Have a wonderful afternoon. Bye-bye.